Hello and welcome back to the Protea Academy YouTube channel. I'm Michelle, and in today's video we're going to be discussing some tips to help avoid the cash crunch. Now, cash flow is an important element of any small business, and to effectively manage your cash flow you need to be aware of all of the aspects that can affect it and how this will impact your business. The best way to achieve this is by understanding what might cause fluctuations in your cash flow and coming up with solutions ahead of time so that in the event or if a negative event were to occur, you wouldn't be caught off guard. So with that said, in this video, we're going to discuss some common factors that may reduce or increase your company's cash flow, as well as provide you with some tips on how to handle crunches when they arise. So with that said, let's jump straight in. So the first question then becomes, what is cash flow? Now, in quite simple terms, cash flow is simply the money flowing in and flowing out of your business each month. Small businesses need to strike a balance between their accounts receivable and their accounts payable to ensure that there is more money flowing in the month than what is flowing out. And although cash or your cash flow is related to your net income, there are some key differences. So when we look at net income, we're referring to the earnings of your business during a period after taking into account all of the expenses that have been incurred. Now, net income will also include sales that have been recognized, but that won't, or the cash related to that sale will only be collected a few months down the line. And in addition to this, there are also expenses that we'd include in our net income, such as a monthly depreciation charge, which is a non-cash item. So it's important to consider these items when we do compare our net income and our operating cash flow. Understanding how your business generates and uses cash can help you better navigate the growth of your company, and analyzing your cash flow will help you see how your business is performing and how much liquidity your business has. Now, having cash on hand puts you in a better position financially, it adds stability, and it gives you better purchasing power. Your cash flow determines how quickly you'll be able to expand your business. And in addition to this, having positive cash flow will lead to a cash surplus, which makes you a worthwhile investment for banks and investors. Now, there are so many things that you can do to keep your business running smoothly, and you should have a plan for every day. When the unexpected happens, you should be able to react. Now, there are three areas that I'd like to focus on in this video that will go a long way in boosting your cash flow. So the first way to boost your cash flow is by looking to increase revenues. And there's two parts to this. The first would be looking at or keeping an eye on your customer retention rates. Your customers are the backbone of the business, and if your customer retention rate is low, now would be a good time to have a look and see why that is. The customer is the one who provides you with the funds for your business, and they essentially keep you in business. So this is a very important element when looking at boosting your cash flow. The next element in terms of increasing revenue would be finding out what is lacking in the market and offering new products and categories to augment your current offerings. You may be able to charge a higher price for new items or a higher price for improvements on existing items. So definitely something to look into in order to boost your cash flow. The next area to look at in terms of boosting your cash flow is looking into decreasing your expenses. Now, there are a couple of ways to do this. One being reaching out to new suppliers or renegotiating prices with existing suppliers. Even look into offers to pay early, which could result in you getting a small discount, which is almost always worth taking. Another part would be finding ways to automate or even outsource parts of your operations. And the third component would be finding less expensive suppliers that have nothing to do with the product you sell. So you don't want to sacrifice your product quality for a cheaper or lower price, since this would affect your image and your reputation in the market. So rather focus on costs such as office supplies or even a less expensive insurance provider. The last area that I'd like to focus on in terms of boosting your cash flow is your operational efficiency. Be open about your cash flow situation or what the cash flow situation is with your team. They will need to know if what is going on, if cash is tight or it is going to become tighter. And they can help your business quickly find ways to cut expenses or reinvest profits into projects with higher rates of return. Another area to look at would be finding ways to increase your return on assets. Now, smart business owners track their return on their assets because it reveals how effectively you are investing in your business. The third part would be managing your inventories through buying more efficiently or increasing your inventory turnover. When you buy efficiently, your customer is the focal point, which makes it easier to make more sales. An interesting observation by the Italian economist Vilfredo Pareto helps explain how best to manage cash flow. Now, he noticed that 80% of the land in Italy was owned by 20% of the population, and he further noticed that this was present in nature, in that 80% of the peas in his garden were produced by 20% of the pods. So what exactly does this have to do with cash flow management? Well, if you look at your business, it is likely that the Pareto principle, or the 80-20 rule as it's known, comes into play. So the question would be, does 80% of your sales come from 20% of your customer base? And if this is the case, then you might want to look into cutting some of your more high maintenance, low profitability clients. Your ratios may be different, but the understanding that roughly 80% of your output results from 20% of your input will give you a competitive edge or a competitive advantage on where to look to focus your effort and your resources. By keeping an eye on your expenses, income, and operational efficiency, you'll be able to predict when you might need a little extra cash coming in or going out. And you can even use a budgeting tool to help with this process. You'll be able to see how much money is coming in each month and where all of this money is going out each month, which will make it easy for you to effect changes as and when they are needed. As always, we trust you found this video insightful, and should you have any thoughts, comments, or suggestions for future content that you'd like to see, please feel free to drop it in the comments section below. Please also join us on our social media platforms such as LinkedIn and Facebook, or at our website at proteafinancial.com. Protea Academy, striving to achieve better accounting for everyone.